So listen, my next guest says last Friday's flush was the beginning of the fourth quarter rally, and not more of a downcline, but the beginning of an upcline. And I got to tell you something. I want to show you to check this out, right? The list of clients at Bank of America, and sorry, Rich Ross is with us. I'm sorry, Rich. So this is interesting. They put this out. This is their clients, but we had the fifth largest week, right, of buying the dip. What was really more important, though, the biggest ever week for buying a dip when the market was down at least 1%. So you say, well, golly, that's dumb money chasing. Was it really just so-called dumb money? Yeah, retail was in there, but look at institutions buying the dip. So, you know, people are understanding this. You want to be a part of it, but you've been more aggressive than most. In fact, your target between now and the end of the year is 7,400, right?
Yes, I still think there's 10% upside into year-end, Charles.
Wow. So what takes us there, Rich?
So keep in mind, in an average year, we're going into the strongest period of seasonality for the market. Seasonality in isolation is not a reason to embrace a market or to sell it. But the key point is, in an average year, you get a 5% gain November, December. This is an above average year from both the top down and the bottom up. Keep in mind, you've got the most bullish setup in terms of the Federal Reserve pivot. You've got the 10-year yield at 4%. You've got crude oil at $58. You've got the wealth effect of an S&P 500 at an all-time high, again, going into the strongest period of seasonality. With the Fed at your back for the first time in 4 years, I like those odds, Charles.
Yeah, I like those odds as well. Let's talk about making money in this market, right? Wall Street spends so much time. Is it the bubble? Is it over? You're like, no way. And this is sort of how you set it up with your tech plays. Why Broadcom and NVIDIA together? I mean, it's sort of, you don't have to pick one or the other.
Yeah, I love these both structurally and tactically, meaning like right now. Let's do away with the Wall Street nomenclature, as it were. Semiconductors still the underlying commodity of AI, of technology, and that's the bedrock of the bull market. These are the two leading stocks here. What I love about it right now, tactically, these stocks are essentially unchanged over the past month. NVIDIA's just been consolidating, sort of lying in the weeds. So you talked about how hard it is for active managers to outperform. The way to outperform is to zig when others are zagging. These stocks lying in the weeds, they're rested and ready to rock over the past 2 months, following 2 months.
I was kind of surprised when I saw Oracle as your highest conviction, right? Full disclosure, I have my subscribers would get out of it around 35 or whatever. But obviously, there's a story there. That's how you don't get a stock moving up like this with these giant gaps if there's not a story there. What's the next leg of the story that takes it so high?
Exactly. You know, technical things happen for fundamental reasons. You can see that big window there, that gap higher, 35% move in 1 day for what is now an $850 billion company. Clearly, there is change afoot that the market has not seen. So again, similar to Broadcom and NVIDIA, Oracle has now consolidated that massive 35% one-day move over the last month, 20% correction, back to the 50-day, ease that overbought condition. You are ready for the next leg up. It's going to take you over 400.
You like banks and financials. Real quick, I got 2 more screens if we can get through them.
100%.
American Express and Capital One. American Express I want to zero in on because it felt like, you know, we had Circle, Stablecoin, you know, some of these names, right? And I'm going to go drill down even a little bit more. So this is it. Some of these names are you worried that Stablecoin, those kind of things may start to erode some of their opportunities for these big companies that we thought had impenetrable moats?
Well, again, I'm going to stick to the charts, and American Express itself has an outstanding chart. Financials, in particular, the big banks. So again, almost a microcosm of what's going on in the economy and the consumer. Post the Fed, you've seen grave weakness in consumer stocks. Those fears have been assuaged by the strength in American Express, the blowout earnings from the banks. So again, I'm not overly concerned by the threat that is offered by stable coins or the crypto ecosystem, as it were.
All right, real quick, small caps you like. I love the chart that you use, but because you mentioned something, I'm not sure I've ever heard of it. You said the more cowbell, is that sort of the breakout? This is so small caps are going up, but this is probably kind of more important for a lot of people. This is relative to the large caps. They're making a nice breakout here, right? This is what you really think is the true buy signal?
I would buy them absolutely, but I'm not ready to go small over big relatively. Okay. And I'll tell you why. Again, just real fast, it's hard to think about the world being in a bubble. Small caps are where they were 4 years ago in 21. So a bubble is not when something is unchanged over 4 years. But again, the macro backdrop is more conducive to an expansion of breadth, but at the same time, it's still big over small. Big banks, big tech.
Big. You think big, and you've been making people a lot of big money, my man.
Thank you.
Thank you so much, Rich. Really love your energy and your smarts.